The MacD, or Moving Average Convergence Divergence, is a popular momentum and trend following indicator used by traders and investors to gauge the strength, direction, and potential reversals in price trends. The MacD is built for moving averages and is especially useful for spotting shifts in market momentum and timing entry and exit points. How MacD works. The MacD is composed of three main elements. MacD line. This is the difference between the 12-period exponential moving average, or EMA, and the 26-period EMA. Formula: MacD line equals 12 EMA minus 26 EMA. Signal line. A 9-period EMA of the MacD line. It acts as a trigger for buy-or-sell signals. Histogram. The difference between the MacD line and the signal line. This histogram visually represents the strength of the trend and whether momentum is increasing or decreasing. How to read MacD crossovers. The MacD line crossing above or below the signal line provides important signals. Bullish crossover. When the MacD line crosses above the signal line, it is seen as a buy signal because it suggests increasing upward momentum. Bearish crossover. When the MacD line crosses below the signal line, it is seen as a sell signal because it indicates weakening upward momentum or increasing downward momentum. Histogram. The MacD histogram helps visualize the difference between the MacD line and the signal line. Positive histogram. When the histogram is positive, meaning the MacD line is above the signal line, it suggests upward momentum. Negative histogram. When the histogram is negative, meaning the MacD line is below the signal line, it signals downward momentum. Histogram divergence. If the price makes higher highs but the histogram makes lower highs, it can signal a bearish divergence. Conversely, if the price makes lower lows but the histogram makes higher lows, it signals a bullish divergence. Zero line. The MacD oscillates above and below the zero line, or center line. Above zero, when the MacD line is above the zero line, the market is considered to be in an uptrend. Below zero, when the MacD line is below the zero line, the market is considered to be in a downtrend. How investors use MacD to gauge the market. Identifying trend direction. Investors use the zero line to determine whether the market is in a bullish or bearish trend. If the MacD is above the zero line, the trend is bullish, meaning the price is likely moving upward. If the MacD is below the zero line, the trend is bearish, indicating the price is likely moving downward. Spotting momentum changes. The MacD crossover, which is the MacD line crossing the signal line, is a powerful signal to enter or exit trades. A bullish crossover is often taken as a buy signal, as it shows that momentum is shifting in favor of buyers. Conversely, a bearish crossover is a sell signal, indicating that momentum is shifting toward sellers. Confirming trend strength. Investors use the histogram to gauge the strength of the trend. A growing positive histogram indicates that the bullish momentum is strong, while a shrinking histogram indicates weakening momentum. A narrowing histogram can signal that the market is losing strength and that a reversal may be near. Spotting divergences. A bearish divergence occurs when the price is making higher highs, but the MacD line or histogram is making lower highs. This signals weakening upward momentum, which could precede a price drop. On the other hand, a bullish divergence happens when the price is making lower lows, but the MacD line or histogram is making higher lows. This suggests that downward momentum is weakening, which could lead to a price increase. Timing entries and exits. A buy signal occurs when the MacD line crosses above the signal line, typically seen as a signal to enter a long position. A sell signal happens when the MacD line crosses below the signal line, indicating it's time to exit a position or enter a short trade. Practical example. Suppose the price of a stock has been trending downward for weeks, but the MacD histogram starts to shrink, showing a bullish divergence. This may suggest that the downward trend is losing strength. and investors might consider entering a long position when the MacD line crosses above the signal line. If a stock is in a strong uptrend, but the MacD line crosses below the signal line, this could signal that the momentum is fading, and an investor might sell to lock in profits before a potential price decline. Key takeaways: MacD crossovers. A bullish crossover, where the MacD line is above the signal line, is a buy signal. A bearish crossover, where the MacD line is below the signal line, is a sell signal. Histogram. A positive histogram indicates upward momentum, while a negative histogram indicates downward momentum. Zero line. The MacD line above the zero line signals a bullish trend, while below the zero line signals a bearish trend. Divergences. Bearish and bullish divergences between price action and the MacD can indicate trend reversals. MacD is widely used because it can be applied across different time frames and provides both trend following and momentum signals, making it highly versatile for trading and investing decisions.